Now that we're a few weeks into the start of the fourth quarter, it's time once again for the stock market's so-called earnings season. In today's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins Business Courier publisher Jamie Smith in the studio to talk about what we've learned so far this season and what it means going forward. Mike and Jamie.
Thanks, Kelly. Mike, thanks for being here today.
Good morning.
All right, refresh my memory.
Sure.
What exactly is earnings season?
Sure, yeah, so very basically it's just the several-week reporting period after each calendar quarter when publicly traded companies let us know how they did for that previous quarter. And so, you know, that's obviously very important for investors. It gives us a pretty good picture of how business is going for individual companies in particular. But then, of course, when we look at them in combination, we get a sense of how the economy as a whole is doing. And so, at this point, we're maybe about halfway through the earnings season. We're a couple weeks in. Companies don't report all at once. They string them out over time. So we've got a little ways to go yet, but at this point we do have a pretty good picture of how things are going.
So what does that picture look like? Is it a good picture?
I'll say so far so good. You know, things have been going good, but not great. And while maybe that doesn't sound overly enthusiastic, it's important to keep that in perspective. So market analysts tend to try and estimate what each quarter will look like beforehand so that going into earnings season, we have a gauge, if you will, of things are better or worse than expectation. So heading into this earnings season, frankly, the expectations weren't very high.
Okay.
Everyone recognizes that economic growth right now isn't particularly strong, so expectations were kept very reasonable, and it turns out that we're meeting that anticipated expectation. So a good quarter, you know, nice, respectable growth, but certainly not...
so not great news, but not bad news.
Yeah.
All right, well, does that give us any indication of how the year's going to finish up?
Well, yes, actually it can. When we get these earnings reports from companies, of course, they provide a lot of detail about what happened the previous quarter. But they also then tend to give us kind of a sneak preview, if you will, about how they see things playing out for this coming quarter. And those forward-looking projections, of course, are just as important to investors. You'd like to know that the companies you invest in did well last quarter, but you'd like them to be doing well this quarter too. And so far, those forward-looking projections are, again, reasonable. Okay. You know, no one's coming out and saying that the fourth quarter is going to be gangbusters, but that more of this sort of slow and steady growth that we've seen the last few quarters is probably likely. So all things considered, there's nothing wrong with that. We like things to be more optimistic than pessimistic. So the fact that the expectation is at least moving forward as opposed to taking a step back, that's going in the right direction.
Well, we love great news, but we'll take, you know, we'll take not having bad news.
Exactly.
How about that?
Yeah.
All right, Mike, as always, thanks for being on the set.
Thank you.